What's up? Welcome to Trading the Markets Weekend Edition. This is, Richard Joseph, aka Creative Minds. So, quick announcement. I'm gonna be in Dominican Republic from November 1st to the 6th. So basically, there will not be any classes this week, including the free and the paid classes, which is why I'm making this extra video for you guys. Also, so basically. Once I do come back, November 7th, classes will resume, and I have some goodies for you guys, some new curriculum, especially for those who are new and really need someone to hold their hand just to get started, stuff like that. My paid classes I would highly recommend, and I have some things for newbies. Newbies November. Yeah, I just made that up, but basically it's gonna be really good. So I'm just gonna give you guys a little rundown on the week, how I'm going to play it. Even when I'm on vacation, I plan to trade on Wednesday because FOMC, and that's when the chairman of the Federal Reserve, Jerome Powell, is going to raise the interest rate, and that's when the market moves. So that day, I think I'll record that day while I'm out there. But anyway, let me just break down to the SPY and what I have for the week. So let's do some charting. Let me share my screen. All right, so right off the bat, this website right here is the Federal Reserve tool, basically, to watch the interest rate. So if you notice right now, the market is pricing in a 75 basis point increase. So that just means they're gonna raise the interest rate by like 0.75%. So that's what they're pricing in, right? But what's interesting, right, is that let me erase. Actually, I can just click one right here. If you go to December, the market has a higher rate for December where they're pricing in a 50 basis point increase. So this one would just be 50 basis points. You know what I mean? So that one's 75 basis points. And this one would be 50 basis points. So this is showing that they're expecting the Fed to loosen up, and this would essentially help the market, rally and go up. Let me keep going. So that's that, right? So that could spell good for the market, but we still gotta look. So let's look at the charts real quick. All right, so I'm just gonna look at SPY, right? You guys know, actually, I'll look at ES. These are the futures, and why not? Because it's good for us to start getting used to these numbers. So this is a monthly chart, so every single bar represents 1 month. You guys know green means it goes down. Green means it goes up, red means it goes down, and these sticks called wicks at the end, they just represent the highs and the lows for that month. So first thing I want you to notice is if I turn on the 50 MA, so this is the 50 period moving average. So basically, it takes the last 50 bars and makes an average, and the line represents what the average would be. And if you notice, this 50 has been great support for years, even back in 2012. Every time we've been able to bounce out the 50, except for COVID, we actually did close below it. But for the most part, we've been able to bounce off of it, and that is what we've seen to do. But the main thing to notice is that if you look at this month, right, it's a green candle and it's bullish, it's strong. It finished near the highs of last month, so it did break a little bit under the month, but it failed. So this shows that the buyers really responded well. But understand that we're still not out the woods yet. How do we know? Because we're still in a downtrend. As you can see, we're still making lower highs. You know what I mean? But if I go to a small time frame, you'll see how it's starting to shift. So that's the monthly, right? Now let's go to the weekly. Remember, you guys want to get the whole big picture, so you start with the bigger time frame. So on the weekly now, so if we look at the weekly, we see that it's still down, it still could be considered downtrend, but there is one thing for you to notice it, which is this. So, let me annotate. So yeah, we've been making lower highs, right? Right here, we had a rally where we made a higher high, right? But then since then, we've been making lower highs, and we made this low high, lower high, low high right here. But notice that we broke this pattern, and now we're finally making the higher high. And from here, we're finally making higher lows. So this is showing the shift to the uptrend. Though we're not out the woods, the fact that we did close green for the week and we broke the highs of the last high, it showed that the sentiment is starting to change. All right, and if you notice, if you guys want to know, this is just the new futures candle, so don't worry about it. All right, let me erase these things, and then let's go on to the daily and notice some things. Now if I go to the daily, all right, so I see that we broke the 50 on the daily. Also on the weekly, let me go on the 200 is also something I wanted you guys to see on the weekly as well. Hold on. So the 200 is going to be this pink line right here. So notice that we're holding support on the 200 moving average right now, and we're actually bouncing off of it. And we bounced off of it in the past on the weekly. All right, so now on the daily, so all I'm doing is looking at different time frames where it represents different amounts of time. We see that the daily looks the most bullish. I'll take away these moving averages real quick for a second. All right, the daily is the most bullish, simply because we're holding this trend line right now. We're holding this trend line, and you see how we're bouncing off of it, and we broke this area right here. So let me show you guys. Like I said, we broke this area, which was like, if you guys know this pattern, this double bottom W. Once you break this neckline, we can keep going higher. But what makes it even better is that not only did we break this level, let me use this color. So we broke it, but then we came back and retested this line and then shot up. So this is what you call healthy growth. You always want to see healthy pullbacks to a level that gives it support and backs it up to keep going higher. And that's what we're seeing right now. So like I said, it's making higher lows, right? And we recently broke this high right here. So this is why it's actually a very bullish sign. So the next level that we may reach, let me draw some levels and what I think. I mean, either the way I play, we're not here to think, we're here to react. So all you have to do is wait for the impulse move. Most of the time, traders, we don't like to wait. We have to wait. Wait for structure, wait for it to become obvious. Like, think about it. Like, if you're playing this day and you've seen the candle cross this and it's going higher and higher, you would have known, okay, the direction is up after a certain point, because it's so strong, it has so much momentum, has so much volume. So why not wait for the strong impulsive move before you get in? Don't try to guess. We're not here to guess, we're here to react. So important levels, you already know, 4,000. So right now, this, we got to see how we break off this high. But then after that, psychological level 396, and even is a level, and even I'll do one more. You already know 4,000 psychological level. So these are the levels to the upside, right? But we also have to consider the downside. Why? Because this week is FOMC. So on Wednesday, Chairman Powell is going to be speaking about the interest rate, and we're going to know whether it's going to be a 75 basis point or it's going to be a 50 basis point. We're going to know how much they're going to raise the interest rate. And usually when that happens, the market moves like crazy. Like this was the last one. You guys see this big candle right here? That was the last FOMC. So Wednesday, here we go again. We're going to see which way the market goes, but we got to be ready. So really and truly, if tomorrow is not a big day, it's not a lot of movement, it's better to save your money and don't even play. But if there is movement and you can scout, then you can make some money. But at the end of the day, remember that we want to save our money, protect our money for days like this, which is coming up, where we can actually make great risk to reward on the profits. So now as far as plays that I'm looking at, you guys already know ET. ET is right at this zone. It made 52-week highs, and it's funny how it hit this. If you guys know, it hit the supply zone that I drew months ago, right to a T. And if we can break through this, then we can certainly go a lot higher. Because even if you look at it on the weekly, you guys can see this level that we're in for. Let me look on the monthly. You guys can see the levels on ET. And once it breaks through this right here, basically, I can even probably make this a little smaller. Once it breaks through it, then definitely we can go a lot higher, because it's basically this whole impulse move that ET has to take. And I can see ET maybe by the end of the year we can hit 18. I mean, I'm very bullish on it, but maybe it won't go that high, but I could definitely see it going to 16. So ET for you. And PCG is the other one. As you can see on the monthly, this is actually starting to make some noise. I can see it in that $16 range, maybe even struggling around there. But this is actually going to be accepted into the S&P 500. And this is basically one of my top stocks. The other one is RIG. As you guys can see on the weekly, it's actually making progress. And basically, as the market turns around, a lot of these stocks are going to start doing better. And you see it did break out, but it did come back underneath. So I'm definitely going to watch it. And let me show you guys how would I actually play this. All right. So one thing I recommend, as you guys can see right here, I have one computer, which I run for my demo. The other computer I run for my live account. From how my demo is moving will tell me how I can enter my live account. So let me show you my demo. So this is my demo. So basically, the stock I wanted, the last stock I was RIG, right? So right here is the premiums for the RIG, $11 call. So right here, if I type in RIG, and you guys have to understand, the cheaper the stock, the cheaper the option, the less it moves, the more you make. Remember that. The cheaper the stock, usually the cheaper the option. So then the more it can move a little bit, the more you make. That's basically what I'm saying. So I'm looking at these weeklies expiring this Friday. If you're not used to options, playing weeklies, don't play them. But here's what you guys have to notice. A couple of things. The option chain is very important. So right here is the implied volatility of a RIG. So it's saying that RIG can move about 46 cents up and down by the end of the week. So that's something to consider. Now, what you want to notice is that, like, for the one strike out the money, the $4 calls in particular, you can go on the money and be safer, but I like to be cheap and go for big risk, big reward, because if it does move 50 cents, these that are 8 would go to about 27. So it's a huge risk to reward. But one thing you'll notice is right here, net change is down 30%. So Friday, it closed $3 down from the day before. So if you look at the bid and the ask, the price in between them is $8. So if I was to buy this, it would be $8. And as you can see, let's pretend I'm going to buy this right now. Buy, single. As you can see, mid price $8, 0.088 cents. That means $8 because it's per share. So you have to times the number by 100, because one option contract controls 100 shares. I don't want to go too deep into it. The main thing is this: that right now they're going for $8, right? So notice that's $3 down from Thursday, because it's the day before. So that means that Thursday these were at $11, and then they're down 30% to $8. So now, what I want to know is what's the best price to buy these at? Because listen to me, guys. If you guys want to be successful with options, it's all about the premium. All about the premium. So let's see. So let me go to the premium. So this is what this is. All about the premium, baby. So look, this is showing you, this is a daily chart of the premium. So this is what the prices were. So since this option was created on 10/3, it was over at $4. And look, the next day, it hit a high of $8. So The next day, it actually ended up doubling, right? Then you see it fluctuating. It actually went up to 14, but then it came right back down to 5, even hit 4 again. Notice that 4, right? So hit 4 again the second day, then it hit a 4 again this day on the 18th. And as you can see, the price was very fluctuating up and down. It hit 12, came down to 9, made a high at 14, and then you see that it even hit that low again at 4 on the 24th, which was last week, and it made that high at 12. So understand, in one day you could have quadrupled your money in one day playing this option. So now it's all about knowing how to play these nuances. So you see that as of lately, it had hit 17, that's the high, and it went nothing but down for the whole day, right? Did the same thing again, on Friday. So now I want to see what price I can get it at. So if I can get it at $4, perfect. Get it at $5, perfect. But mind you, I know that there's not much time left on these contracts. So if I get them at a low price and I catch a bounce, I have a high chance of making profit. So that's basically how I'm playing this rig. I want to get it at $4 or $5. So what I would do is I put an alarm, but I could buy it instead of limit order, or I buy it at those prices and I just wait. So let's say I want to get it at 5. Let's say I get 5 contracts at 5, right? Just to see, test the waters, and now I can, when the market opens, we can see if I get filled on these 5 contracts. You guys get that? So basically, there's a couple things that could happen. I'll do my last recap on SPY, what could happen, and then that'll be it. Maybe I'll make another video while I'm out on vacation. But let's do this real quick. So let me share my other screen. Stop sharing the screen. Hold on, guys. All right. So yeah, that was great. So now back to SPY, the market. Now I'm gonna look at SPY, and I was looking at SPX last time. But you guys look right here. These gray boxes, they are the expected moves. And you notice that last week SPY did travel outside of its gray box, outside of expected move. A lot of money was made. So now they have an expected move up here. It's about 400. That SPY may go up there, and I think it may, especially as the way it's moving on the weekly. But there's a couple things that can happen. Let's look at the daily, right? Couple scenarios, right? So let me draw. And remember, it's not the way you should play the market is if X, then Y. If this happens, then that. Do not guess. Even though it's obvious there's bias to one side, you still want to get the best entry. So that's why you don't guess and you wait. Wait for it to happen. Don't guess. Because it's like a lot of people they just want to trade, like, oh, I just want to trade today. I want to put on the trade. No, let the trade come to you. So here we go. So possibility. So we may break above this, right? If we break above this, then I would wait for a pullback, retest, and then ride the market up. If we break inside here, I would definitely wait for us to break either this or that, either the high or the low, before we make a decision. So let's say we break down, then I want to see if we're going to retest this and then keep going down. So basically, whatever direction, I'll let it go that direction first and then wait for it to come back and see what it does from there. So that's the safest and best way that I will play the market. And last but not least, the sectors. So right here, you got move these things. So I make a list called the sectors, and the main thing is technology. That's okay. If you guys look at it right now, it is starting to break, but overall, it still is. Just now, it's lagging compared to financials, XLF, which is ripping. Maybe you might pull back from here. And healthcare, which is doing good. And healthcare is the second heaviest sector in the market, so it's very good to see that this is ripping. But XLK, which is technology, is the heaviest, and as you can see, it is lagging. So it does need to pick up. But I mean, it is actually picking up now. XLY, no, this one is lagging. Yeah. XLY, consumer discretionary, this is lagging. So this would need to pick up a bit more for the market to really do its thing. And then energy, XLE, you see energy has been selling off. Maybe it may cool off, maybe it may pull back, but it also could keep going. But as this keeps going up higher, it is going to be harder on the market to keep going higher because it will take money out of the other sectors if it all goes into the energy. And so that's about it. Tune in. Like I said, next week, no classes this week. Next week, after vacay, I'm gonna open a whole new can of worms for everybody. So tap in, tune in, and remember, it's all about discipline. Doesn't matter if you make $20 a day. If you can keep doing that every day, I'm more impressed by that than you just making 2,000 on one trade. So let's keep that in mind. All right, be disciplined and remember, master among. If you discipline among few, then you become master among many. All right, peace.